Cinder Wealth primarily serves business owners and their employees. We focus on income and estate tax strategies, and we do this by coordinating with your attorney and your CPA. Here's what I find in the industry. Most CPAs, attorneys, and financial advisors don't communicate, or if they do, it's very minimal. So what happens? Your CPA is over here doing your tax prep, your attorney drafted your will 5 years ago, and your financial advisor is managing your investments. But nobody's asking, do all these pieces work together? That's the problem we're going to talk about in this video. I'm Matt Losanno with Cinder Wealth. This video is educational only. It's not personalized financial, tax, or legal advice. Always consult your own advisor before making decisions about your situation. Why coordination matters. Here's the reality for most business owners. You've got multiple advisors, a CPA handling your taxes, an attorney who helped you set up your LLC or drafted your estate documents, maybe a financial advisor managing some investments, possibly an insurance agent who sold you a policy years ago. And here's the thing, each of these people is probably good at what they do. The problem isn't competence. The problem is they're all working in silos. Your CPA might recommend a certain entity's tax structure to save on taxes. Your attorney might suggest a different structure for your liability protection. Your financial advisor might not even know what your entity you're using. So what happens? You end up with a patchwork plan. It's not coordinated. It's not integrated. And when things aren't integrated, you get gaps, sometimes expensive gaps. I had a situation where a client's buy-sell agreement was drafted by their attorney. Life insurance was purchased through an insurance agent, but nobody checked whether the policy titling matched the legal intent in the agreement. When we reviewed it, we realized it was structured in a way that could potentially increase their estate tax by millions. Not because anybody did their job wrong, but because nobody was coordinating. And look, I'm not saying your advisors are bad. I'm saying the system is broken. Most advisors aren't trained to coordinate. They're trained to do their piece and move on. So what does good coordination actually look like? Let me walk you through a real example. Names and details changed for privacy, obviously. I had a client setting up a new business. They were going forward with an FDA drug. They had a supplement business. They wanted to turn it into a generic drug. They thought the business could be worth $50 million in 5 years. So I set up a call with their CPA and their attorney. The three of us got on the phone. The attorney said, I want to set this up as a partnership for liability protection. Right, great. The CPA said, I want to set this up as S-Corp to minimize income taxes. Both made sense from their perspective, but I was thinking about the exit. I called the client and I asked, what's your plan for 5 years from now? And they said they'd probably sell it. So I went back to the advisors and said, what if we set this up as a C-Corp and structure it for a qualified small business stock deduction? Here's what that meant. Each owner gets a $10 million capital gains exclusion if they hold a stock for 5 years and it's a C-Corp. We structured it so the husband, the wife, the brother, and the brother's wife were all owners. 4 people, 4 exclusions. That's $40 million in capital gains they wouldn't have to pay tax on when they sold their business. If we'd done the S-Corp or partnership structure, they would have lost that benefit entirely. The point? That only worked because all 3 advisors were working on the same call, thinking about the same goal from different angles. That's coordination, the quarterback model. Now, here's where it gets practical. You're a busy business owner. You don't have time to go between all of your advisors, and frankly, you shouldn't have to. That's why you need what I call a financial quarterback. Someone whose job is to keep everyone aligned with your goals, make sure your tax strategy, your legal structure, insurance, and investments all work together. Translate between professionals when needed. Create a rhythm, like annual reviews where everybody checks in. Now, I'll be honest, I prefer to be the quarterback for my clients. Not because I'm the smartest person in the room. I'm not, but because I've seen what happens when nobody takes that role. Things fall through the cracks. That said, it doesn't have to be me. It doesn't even have to be a financial advisor. It could be your CPA if they're proactive type. It could be your attorney if they're strategic. The key is this. Someone needs to own coordination. Otherwise, it just doesn't happen. Red flags your advisors aren't coordinating. Let me give you some red flags that your advisors probably aren't coordinating. 1, they've never met or talked to each other. If your CPA and financial advisor have never been on a call together, that's a problem. You're the messenger. If you're constantly relaying the information back and forth, my CPA said this, what do you think? That's a coordination problem. Conflicting advice. Your CPA tells you one thing, your attorney recommends something else, your financial advisor has a third opinion, and nobody's talking it through together. 4, reactive, not proactive planning. Your advisors only show up when you call them with a problem. Nobody's reaching out ahead of time saying, hey, based on what's happening this year, here's what we should be thinking about. Number 5, no annual review rhythm. You haven't had a meeting with your core advisors in the same room or on the same call in over a year. Or ever. If any of these sound familiar to you, you probably have a coordination gap. A few mistakes I see business owners make. Assuming coordination happens automatically. It doesn't. You have to ask for it or hire someone whose job it is to make it happen. Mistake number 2, thinking all advisors are the same. Not every CPA does proactive tax planning. Not every attorney is strategic. Not every financial advisor coordinates. You need to find advisors who are willing to work with others. Mistake number 3, being too loyal to underperforming advisors. I get it. Your CPA did your taxes when you were just starting out. But if your business is worth $10 million and they're still treating you like a startup, you might have outgrown them. And again, every situation is different. I'm not saying fire your advisors. I'm saying evaluate whether they're coordinating. So here's my takeaway. You've worked hard to build your business. You probably have good advisors. But if they're not talking to each other, you're leaving money on the table. Or worse, you're creating risks you don't even know about. Find someone who can be your quarterback. Make a coordination a priority. And if your current advisors won't work together, it might be time to find ones who will. If this was helpful, subscribe. I put out videos on tax strategies, exit planning, and wealth coordination for business owners. One last time, this video is for educational purposes only. It's not specific advice for your situation. Talk to your CPA, attorney, and financial advisor about your needs. Thanks for watching.